Welcome to Retail Insights, the podcast where we delve into the latest trends and transformations shaping the world of shopping. Today, we're taking a deep dive into a significant announcement from a true icon of American retail, Macy's. The department store giant has confirmed plans to close a substantial number of its locations, around 150 stores over the next 2 years. This isn't just a few shops here and there, it's a major strategic shift. And we're here to unpack exactly what's happening, why it's happening, and what it means for Macy's, its employees, and the communities it serves. The news officially broke in January of this year, 2025, with the confirmation of 66 Macy's store closures slated for this year alone. This is all part of a larger initiative dubbed the Bold New Chapter Strategy, which aims to shutter approximately 150 underperforming locations by the end of fiscal year 2026. This move comes at a critical juncture for the retail industry, which continues to grapple with the rise of e-commerce, changing consumer habits, and increasing pressures on traditional brick-and-mortar stores. So, why this drastic measure? Well, the research points to a few key factors. Primarily, these closures are a direct response to the underperformance of these specific stores. Macy's has consistently referred to them as underproductive, suggesting a data-driven approach to identifying locations that are no longer meeting their strategic goals. This underperformance is, of course, closely tied to the significant shift we've seen in how people shop. More and more consumers are turning to the convenience of online purchasing, especially for everyday items. This trend, accelerated by the pandemic, has led to a decline in foot traffic for traditional retailers, particularly those located in shopping malls. But it's not just about cutting losses. The Bold New Chapter strategy is also about strategically reallocating resources. Macy's is focusing its energy and investments on approximately 350 identified go-forward locations, stores they believe have stronger long-term potential. This means we can expect to see improvements in the customer experience and operational efficiency at these core stores. Interestingly, Macy's is also making a significant bet on the luxury market. The strategy includes plans to expand their higher-end banners, Bloomingdale's and Bluemercury, with new store openings and remodels. This suggests a recognition of the strength and growth potential within the luxury retail sector, even as the traditional department store model faces challenges. To further fuel these initiatives, Macy's also intends to generate a substantial amount of capital, between $600 and $750 million, through asset monetization by 2026. The timeline for these closures is quite aggressive. As mentioned, 66 stores are expected to close throughout 2025, with many anticipated in the first half of the year. Clearance sales have already begun at these locations, offering shoppers a chance to snag some deals before the doors close for good. Geographically, this first wave of closures impacts 22 states across the country. Notably, states like New York and California will see the highest number of closures in this initial phase, followed by Florida and Texas. This widespread impact underscores the national scale of this strategic adjustment. Of course, a decision of this magnitude has significant human consequences. The closure of 150 stores will inevitably lead to job losses for many Macy's employees. While the exact number of affected individuals isn't consistently reported, we do have examples, such as the over 200 job losses expected from the closures of 2 stores in Michigan. Macy's has stated its intention to provide severance benefits and explore opportunities for affected employees to take on new roles within the company where possible. Store management will reportedly be working to identify potential positions at other Macy's locations within the same market. However, the sheer scale of these closures means that many dedicated employees will be facing job displacement, and we acknowledge the significant impact this will have on them and their families. Beyond the employees, these closures will also have repercussions for the communities where these stores are located. In some areas, particularly those with fewer retail options, the closure of a Macy's could lead to what's being called shopping deserts, limiting access to a variety of goods for local residents. The impact is also keenly felt by shopping centers and malls, where Macy's often serves as a crucial anchor tenant, driving foot traffic for other businesses. When a major anchor store departs, it can trigger co-tenancy clauses in other leases, potentially leading to further vacancies and instability within the mall. This could necessitate significant transformations for these malls to remain viable, with some exploring alternative uses for the now empty spaces. On the flip side, in some prime locations, the closure of a Macy's could open up valuable real estate for redevelopment, potentially attracting new businesses and revitalizing the area. So what do the experts think of all this? Retail analysts have offered a range of perspectives on Macy's strategy. Many see the store closures as a necessary step for the company to optimize its physical footprint in a challenging retail environment. The move to focus on higher-performing locations and invest more heavily in digital channels is generally viewed as a sensible approach to improving financial health. However, some analysts have expressed caution, particularly regarding Macy's revised financial guidance for the year, which anticipates a decline in same-store sales despite planned improvements. The decision to close even some of the newer, smaller format stores has also raised eyebrows, suggesting that this particular strategy may need further refinement. The impact on shopping malls remains a key concern for many analysts, as the departure of a major anchor like Macy's can have significant ripple effects. It's important to remember that this isn't the first time Macy's has undertaken significant store closures. In fact, over the past decade, the company has closed more than a third of its store locations. Between 2015 and 2023 alone, approximately 300 stores were shuttered. This historical context highlights the ongoing challenges faced by traditional department stores in adapting to the evolving retail landscape. The current Bold New Chapter strategy, with its accelerated pace of closures, suggests a more decisive approach compared to previous initiatives. Looking back at past closures can offer insights into the types of locations typically targeted and the strategies Macy's has employed to manage these transitions. The consistent theme has been underperformance and the need to focus resources on more profitable areas. In conclusion, Macy's decision to close 150 stores over the next 2 years represents a pivotal moment for this retail giant. Driven by the Bold New Chapter strategy, it's a clear response to the profound shifts in how we shop. While these closures will undoubtedly have a significant impact on employees and communities, they also present an opportunity for Macy's to streamline its operations, invest in its most promising locations and digital platforms, and strategically expand its presence in the luxury market. The retail world will be watching closely to see if these bold moves can indeed usher in a new era of sustainable growth for this iconic American retailer. That's all for this episode of Retail Insights. Join us next time as we explore another fascinating development in the world of retail. If you enjoyed this episode, please subscribe and leave us a review. It helps others find our podcast. Thanks for listening.